Hello guys, welcome back to my channel. This is Hakman Traders. In this video I'm going to be showing you how to recognize false breakouts. Now what are false breakouts? I'm going to show this to you with an example. Now what are false breakouts? A breakout is that is a breakout which now what is a breakout? A breakout is this thing which you can see this is a resistance level, and when the candlesticks broke this resistance line, it's called a breakout. Now what is a false breakout? A false breakout is that breakout which does not move in the direction of the trend and shows some false false results and came back to its original trend. Now that's called a false breakout. Now let me show you over here. Now this you can see is a false breakout. It moved out of the trend. As you can see here, it break the resistance level and came up again to it. So this is called a false breakout. Now you can see. Now what type of breakouts should you consider? Should you consider these candlestick wicks as well, or should you consider only the candlestick body to cross this line? Now you can see the wicks of the candlesticks. You cannot consider them as breakouts. As you can see, those they came down. This was its lowest position. It shows the lowest position of the trading day, like the lowest prices of that particular trading day. Again the same over here, but it closed above the support, the resistance level or the support level, whatever it might be in this case. Now a breakout. Now this is also normal. If a candlestick body, if a candle body opens and trades on the trend line, now this is normal. You cannot consider this a breakout or a false breakout. You cannot. Now this over here, this is a breakout, you can see, but we do not know. Now the trend is moving in a side trend, and this strong bullish candlestick occurred, so appeared over here, and now it is. Now what should you think? Is it a false breakout, or is it a real breakout? Now we do not know that yet, so we'll have to wait for the next trading day to show us of whether if it's a false breakout or a or a real breakout. So we are going to wait for it. Now how would you know that if it's a breakout? Now let's consider if it opened here and closed here and traded somewhere in between this candle body, then this we would be consider as a false breakout, and start coming down, then this would be a false breakout. Now if it's a real breakout, how would you know that? If it moved, let me show you clearly, moved up, okay, another one came down here, touched this trend line, and now it moved in the upward direction. Now this is a real breakout, as it confirms the validity of the trend that it's a bullish trend and will move in the upward direction. So this is a real breakout. Now let's say I'm going to show you with this example. Now if it opened and closed over here again and did this, now the candlestick might not be of this size, but I'm just showing to you as an example, and did this and came back down again to its trend line, its side trend, then this would be a false breakout, as you can see over here. Now this is a false breakout. So you're going to watch out for these type of things. Now this can be good for trading a side trend if you know of where the overall trend is heading. Now in this case, as you can see here, if you've recognized the support and resistance level, now from the beginning over here, as you can see, there is no clear pattern of if it's a support level or a resistance level. To do that, you should have a support and resistance, and now this is a support level, but you don't know whether it's a resistance level or what. You can know from this level as well. Let's say if a false breakout occurs, let's say over here, now you know that it's a support level, and it won't came down again. But if it came down here, traded closely to each other, to the trend line closely, and then from there you can long your position and move along the trend and sell whenever it is near this level. again it is a false breakout over here. The same principle you can apply to it as well, but you'll have to do your risk management as well to know if things go against you. As you can see here, this is a false breakout, again moved in the upward direction. Now this is also, now this you cannot consider this a false breakout, because it's something of overbuying. You can see, like, you can see now what is the specific word to use for this. Now this you can see, you cannot consider this a false breakout, as it is a candlestick that appeared on and beneath the trend line. So you cannot consider this as false breakout. The false breakout would be a one which shows 1 2 3 and then into the trend, but it did not cross, the other candlestick did not cross the trend line and trade in that direction. Now this is a real breakout. As you can see, it moved in the downward direction. Now where this again, yeah, over here it's a clear example, a false breakout. Now this is a false breakout, you can see. By knowing, you will have to run through history to know, to match the support and resistance level. Now how to draw the support and resistance lines? You will have to know the highs and the let me show you it. Now this is a high, you can see. Now these are the lows. So this is a great resistance, this is support level, but resistance level, but again it acted as a resistance level. Now how to know whether, if this now you can see here, this is a resistance level, but over here it was a support level for most of the part. You can see, again you can see here, whenever a candles, whenever a trend line is touched by a candlesticks more than twice, then that point is considered as a trend line from upward. You can see a trend line from upward. Now if the trend line is touched more than twice from beneath the trend line, then that is considered as a resistance level. So this is the method of knowing how to recognize a false breakout. You can trade them as well, and you can, if you do not want, you do not trade in those. Now those are something that overbuying and overselling, as the sellers are not do not know what they are doing. They sometimes jump into the market, even buy more than even the buyers buy the stocks more while the market is in a sell position, while there are bears in the position in the market, in a bearish market. So that sometimes happen. The bear so what happens is, the bears pull down the market again to its original trend of where the trend is heading. Now that sometimes happen, and vice versa if it's a bullish market. So this sometimes happen in the bullish market, in a stock market, sorry. So you will have to watch out for the false breakouts, and do not take them up as as the trend will change. Wait for the candlesticks. If you know the psychology of this candlesticks, this shows the psychology of the traders, of what's in their mind. This shows exactly that of how to this shows their trading psychology of what will be the next move for the traders. So if you master this psychology of the traders by noticing these candlesticks, then you'll become a professional trader, and you know of where the market would have. Plus, if you can use these indicators as well, then you'll be a professional trader in the stock market. Now this is a strong bullish candlesticks, but I'm going to wait for it to show me what is the pattern for the next trading day. So I'm going to wait for that to know what surprises it has for me. So that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.